Earlier this week, it emerged that WiseTech founder and CEO, billionaire Richard White, had bought expensive houses for women he was having affairs with and paying them big salaries. Today, a leaked letter by a former director accused him of intimidation and bullying. It was the last straw. The share price fell another 6.5%, taking the total loss of value to more than $8 billion in a week. And tonight, Richard White resigned, effective immediately. The market as a whole eased today with falls by miners, gains by banks. And in banking news, there is a rare split between them. It's about that loan buffer the bank regulator increased from 2.5% to 3% during the pandemic. It means, of course, that you can only get the loan if you can afford repayments at a 3% higher rate than you're actually paying. So we thought the banks all wanted it cut back to 2.5% as it was, so they can lend some more. But no, NAB and ANZ do. So does the Australian Bankers Association, but today it emerged that Westpac and Commonwealth Bank want it kept at 3% because they're worried about delinquency. Also, they're doing fine, thanks. Speaking of banks, CBA released some analysis of its customer data today showing the impact of the tax cuts, which was quite big in the last quarter. But guess what? Spending did not rise at all. And the second guess what is that the 20% with the lowest incomes are the only ones reducing their spending. In other words, the poorest families are doing all the work of slowing the economy and reducing inflation. The US market fell last night, so did Hong Kong today, while Tokyo rose. Commodities mostly fell, gold, iron ore and oil all down by more than 1%. And the Aussie dollar continued to drift against the strong US dollar. And that's finance.